Okay, so good morning, guys. How are you all? You might not recognize me without my beard. Okay, but I'm that same person who came to take direct tax. Okay, so I told you all to revise and come. Did you all revise the things? Very good. We were doing salaries, right? So we'll try to wind up that chapter today. And then after salaries, we are going to start with the new chapter from tomorrow. Okay, now? So tell me, in salaries, we were doing perquisites. In perquisites, we have done accommodation, 17 subsection 2, clause 1 and clause 2. That we have already completed? Yes or no, guys? Okay. So, accommodation we have completed. Then after accommodation, we have completed clause 3. Clause 3 has 5 perquisites, no? How many perquisites in clause 3? 5 perquisites. Number 1, motor car facility. Then second one, provisioning of gas, water, electricity. Third one, provisioning of servants, domestic servants. Then this means that you have not revised. And why don't you recollect? Come on, tell me. Third one, gas, water, electricity. Then education facility. Then no. Pre-tickets. We have done clause 3 also, no? Or not yet done? Accommodation we have completed, right? After accommodation, we have not completed motor car facility. Motor car facility we have done, I guess. Motor car facility I have done. Yes or no? Then after motor car, domestic servants also we have done. And gas, water, electricity also done. Then educational facility, that is also done, no? Okay, free tickets, free or concessional tickets, that is yet to be done. So clause 3 we were doing, right now? Okay. So in clause number 3, see, 17 subsection 2, clause 3. In clause 3, 5 perquisites are there, which are taxable only in the hands of specified employees, right? Who is a specified employee? You all know, right? No? Okay. Now see, free or concessional tickets. Free or concessional tickets. If you are an employee and your employer is providing you free tickets, concessional tickets, travel tickets, not movie tickets, travel tickets. Okay. So who is going to provide? Employer. Who is going to get these tickets? Employee. Okay. Now for that, these tickets will be provided by an employer in transport sector. Employer in, meaning what is the business of the employer? Transportation. Transportation will be the business of the employer. Other than railways and airlines. See, any such benefit provided by railways or airlines to their employees is fully exempt, is not taxable. So if railways are providing, airlines are providing these free or concessional tickets to the employee or any of their household members, then that benefit will be fully exempt in the hands of the employee. So I am not talking about railways, I am not talking about airlines, I am talking about any other employer whose business is transportation. Okay. Now this employer in transport sector is providing free or concessional tickets to the employee or any of his household members. Okay. Now, the benefit which will arise, isn't it a benefit in the hands of the employee? Employee is getting free tickets. Employee is getting tickets at concessional rates. So, whatever tickets the employee is getting, for that, he is not going to spend any money. If the tickets are provided free, or even if the tickets are provided for some money, that money charged is very less as compared to what he should have given if he was not the employee. So, benefit is happening to the employee. Tell me how much benefit according to you. We are going to value that only. So, here rule 3, sub-rule 6, which says that the taxable value of this perquisite will be how much? The taxable value of this perquisite will be how much? The amount charged from general public. Which public? For such tickets by employer. So if you are not the employee, you are from general public only, you should have given this much amount to your employer to purchase that ticket. Are you going to give this amount? So you are not going to give this amount. That means you are saving this amount. So whatever amount you are saving has to be your benefit. Ayo, understanding? So the amount which the general public would have paid to the employer, how much amount the employer would have charged from the general public, that amount you should also have paid if you were not the employee and the employer would not have provided these kind of tickets to you. Yes or no? So this amount should be your benefit. Minus what? Minus recovery from employee, if any. So whatever amount the employee is paying to the employer. So if he is not paying anything, tickets are provided free of cost, what will be reduced? Nil. And if he is giving some money back to the employer, that amount which he is paying to the employer, that amount will be reduced. So for example, the benefit is 1000 rupees. If the employer would have charged 1000 rupees for the tickets, hello, from general public, so 1000 rupees you are saving, that is your benefit. But how much the employer is charging? Only 200. Only? So how much should be your benefit? 800. 1000 minus 200. 1000 benefit given and 200 benefit taken away. That means net benefit of 800. That amount should be taxable as your perquisite. Understanding? Sure? This is the end of this perquisite. Okay. But we have to remember one thing, that if this benefit is provided by the employer to the employee, this benefit will be fully exempt if the employer is airlines or railways. Then this benefit is fully exempt. Then we are not supposed to do the valuation, then we are not supposed to charge it. Okay? Should I move ahead? Clause number 3 is over. Now, let's move on to clause number 4. 17 subsection 2, clause number 4. This says that any obligation or liability of the employee paid or reimbursed by the even this is a benefit in the hands of the employee. So whatever type of liability is there, whatever type of obligation is there of the employee, who is paying? Employer is paying for that. Employer is reimbursing that. For example, some personal expenses are there. Your house electricity bill. So electricity bill of your household, the employer is paying that electricity bill. That was your personal obligation. But who is meeting that? Employer is meeting that. Isn't it a benefit? How much? Whatever amount the employer will pay will be your benefit. Hello? Whatever you pay and reimbursed by the employer will be your benefit. So here the valuation rule is not required because this is a monetary perquisite. What type of perquisite? Why? Because we don't have to apply valuation rule to get the value of this perquisite. We'll come to know, immediately we'll come to know that how much benefit is happening. How much benefit is happening? Whatever amount is paid by the employer, whatever amount is reimbursed by the employer will be the benefit in the hands of employee. Now, for example, you are engaging some domestic servants. You are engaging some domestic servants. So, to pay the salary to those servants is your liability. Your employer would have engaged and he would have provided, then it would have been your class 3 perquisite, if you remember. I've already done the bifurcation for you in clause number 3. Your employer has engaged and he is providing you, meaning that it is clause 3 perquisite. We'll have to do the valuation over there. The amount of salary paid by the employer to that servant will be your benefit minus the amount recovered from you. Hello? And that will be taxable only if you are a specified employee. If you are a non-specified employee, that benefit is not taxable for you. No need to do the valuation also. Yes or no? But if you have engaged your servants, so you are liable to pay the salary. It was your obligation to pay the salary to that servant. But who is making the payment? Employer. Or you pay, the employer will reimburse you. Isn't it a benefit? Yes, but that is not clause 3 benefit now. It is a clause 4 benefit. Because it was your obligation met by the employer. I've already told you this in clause number 3 only. Now, if the gas, water and electricity is provided by the employer, meaning from his own resources he is providing, or he is purchasing from outside and providing you gas, water and electricity, then it will be clause 3. But what if you are purchasing gas, water, electricity on your name? The bills are coming on your name. Then the liability to pay that gas, water, electricity bill was on you. It was your personal obligation, but the employer is making the payment for that. But the employer is making the payment, or you pay, the employer will reimburse. That will not be clause 3 perquisite. That will be clause 4 perquisite. Taxable for all types of employees, whether the employee is a specified employee or a non-specified employee. Yes or no? I've already told you that only clause 3 perquisite, those 5 perquisites, motor car facility, then provisioning of gas, water, electricity, provisioning of domestic servants, then educational facility, then concessional or free tickets. These 5 benefits are taxable only in the case of specified employees, not taxable if you are a non-specified employee. Right? No. Other than this clause 3, all perquisites are taxable for all types of employees, whether the employee is a specified employee or a non-specified employee. Right? No. So we are talking about clause number 4. Is it a benefit for you? Yes. Will be taxable for you if you are a specified employee or a non-specified. But how much amount will be taxable? Are you supposed to apply any valuation rule here? No. No need to apply any valuation rule. Whatever personal obligation, whatever personal liability, which was your liability, you were supposed to make the payment, but the employer is making that payment. Or employer is reimbursing that payment to you. So how much will be the taxable perquisite over here? Come on, tell me. Taxable value of perquisite. Tell me how much. Amount actually paid or reimbursed by the employer will be the benefit. This amount will be taxable under the head salary. That's it. Getting it or not? Now one very important thing I'm going to discuss with you here. Okay. Now see, this is an employer. Okay. And this is employee. Now this employer this employer is giving what? Salary to the employee. Now, if you remember, salary is of two types. Some salary will be monetary and some salary will be non-monetary salary. Now, what do you mean by monetary salary? Come on, tell me. Cash, money. Money, the employer is giving money. So, the money can be given in the name of basic salary. Money can be given in the name of bonus. Money can be given in the name of commission. Money can be given by any name. Yes or no? Basic salary can be given, commission can be given, bonus can be given, allowances can be given. All those payments which are coming in your hands, yes or no, is your monetary salary. So, your employer is giving you a monetary salary of, for example, 10 lakh rupees. How much? 10 lakh rupees. Now, you might also get some non-monetary salary from your employer. What is the meaning of non-monetary salary? Money you are not getting in your hands. Some benefits you are getting from the employer. But the value of those benefits is treated as your salary. Like accommodation is given. Employer is not giving you any money, but is giving you accommodation. Isn't it a benefit? Yes. So the value of that benefit is treated as your salary. We have already seen that how to determine that value. If you remember, how to determine the value of accommodations. If you are a government employee, then licensing fees will be treated as taxable value. If you are a non-government employee, then 10% of your salary or 7.5% of your salary or 5% of your salary, depending on the fact that where that accommodation is provided, in which city, population of the city, yes or no. Then if the accommodation was taken on rent by the employer, then 10% of salary or actual rent paid by the employer, whichever is lower. So that valuation will be done, the value will be determined, and that value will be chargeable under the head salary. And for your kind information, that value is not coming in your hands, but still that value is treated as your salary. Employer might provide you motor car. Is he giving you money or is giving you motor car? Is it a benefit? So the value of that benefit will be determined. How that value will be determined? Depends that what type of motor car was it, how the motor car is used. Hello? Sometimes 1800 per month, sometimes 2400 per month, depending on the engine capacity of the car. Yes or no? All those things we have already done, no? So, the value of that motor car is also something which is not coming in your hands, but still it is considered as your salary. Your employer might provide servants also. Is he giving you money or he is giving servants? So, is it a benefit for you? Yes. Value of that benefit will be determined and that value will be charged as your salary. So under the head salary, it is not necessary that always you are going to get money from your employer as salary. Yes or no? Sometimes some benefits also you get. The value of those benefits, even though that value you have not received in your hands as what? Salary. But still it is treated as your income. Still it is treated as your taxable salary. Getting my point? So non-monetary salary also you are going to get. You will get accommodation, you will get motor car facility, you will get domestic servants. Likewise, many non-monetary benefits also you are going to get. So those non-monetary benefits are also your salary. So, for example, 2 lakh rupees was non-monetary benefit. Are you getting this 2 lakh rupees in your hands? But still it will be treated as your salary. Now tell me, under the head salary, how much amount of salary will be taxable for you? 12 lakhs, but in your pocket, you will not have 12 lakhs, you will have only. Now just imagine, employer is saying that take this 10 lakh rupees of salary. But when you calculate your salary, under the salary head, 12 lakh rupees you have to show. So the tax will be paid on 10 lakh which is there in your pocket or 12 lakh which you are going to calculate. Absolutely on 12 lakh you are going to pay tax, yes or no? So you are going to pay tax on 12 lakh. Will you like it? Why? The 2 lakh rupees which is not coming in your hands, hello, which is not in your pocket, still on that 2 lakh you are supposed to pay tax, right? No? So you will not like to pay tax on that 2 lakhs. So what did you do? You went to your employer, you told your employer, here, see, employer, take these house keys, I am returning your accommodation to you. Take the car keys, I am giving you the car back. I don't want your servants also. I have brought the servants also from my home. Okay, keep the servants also. Your employer asked you why you are doing that. You said, sir, if you are giving me all these benefits now, the value of these benefits amounting to rupees 2 lakhs is getting charged in my hands as my salary. However, that 2 lakh is not coming in my hands and still that 2 lakh is getting charged in my hands. And I have to pay tax on that 2 lakhs. Hello? So that thing is, bothering me. Instead of that, take all these benefits back from me and give me 2 lakh rupees cash salary. Would you go and ask your employer to do that? Yes, obviously. If I would have been the employee, I would have definitely done that thing. So I will go and tell my employer, keep these items, keep these benefits with yourself. Don't give me all these benefits. Okay, just do one thing. Give me 2 lakh rupees cash salary. Now 12 lakh rupees will come in my pocket. On that 12 lakh, if I am supposed to pay tax, no, I'll be more than happy. But I'll be very sad if 10 lakh rupees only coming in my pocket and I have to pay tax on how much? 12 lakhs. Getting my point, what I'm trying to tell you. So, you're going to return this 2 lakh rupees to your employer. Will your employer accept your demand? Why? Why not? Tell me why not? Because if he will accept, immediately 2 lakh rupees cash outflow will increase for your employer. Yes or no? Just imagine, he was giving you 10 lakh rupees of salary, so his outflow was only 10 lakh. Now, if you start asking for this 2 lakh rupees cash salary, immediately 2 lakh rupees cash outflow will increase from his business. Working capital will come down. And a smart businessman will always try to keep as much cash as possible in his business rather than distributing that cash. Understanding? So what your employer said, that see, keep all these benefits with yourself. Okay, don't ask me for cash salary. You have only one problem, that this 2 lakh rupees salary is not coming in your hand. Still you are liable to pay tax on this 2 lakh, right? No, don't worry. I will pay tax on this 2 lakhs. Can your employer do that? Can your employer agree to pay tax on non-monetary salary? So this is on this non-monetary salary, the tax is paid by whom? Paid by employer. Possible, not possible? Why the employer will pay this tax? Bloody, the tax amount on this 2 lakh will be hardly 2 to 5,000 rupees. Hello? Hardly 2 to 5,000 rupees tax liability will be there on this 2 lakh. Paying 2 to 5,000 will be better, or giving you 2 lakh rupees will be better? Still I will be saving 195,000. Getting my point? So rather than having a cash outflow of 2 lakh, it is always better to have a cash outflow of 5 to 6,000 to save that 2 lakh. Getting my point? A wise businessman will take this kind of decision. So you will also be happy. Why? You will feel that, oh, my employer is so good. See, my 2 lakh rupees non-monetary salary. Okay, on that I am supposed to pay tax. That was my liability, my obligation. But see how good my employer is. But he is giving me benefits. Number one, he is giving me house, he is giving me motor car, he is giving me servants, etc. These many benefits he is going to give me, and these benefits are treated as my salary, and on that salary, that poor fellow only pays tax. You will develop respect for your employer, yes or no? And that will earn your loyalty. Number one. And number two, I will save my cash outflow also. A wise businessman will always do such kind of things, yes or no? So tell me, if the tax is paid by, don't you think the tax on this 2 lakh was supposed to be paid by you? It was your obligation. But who is meeting this obligation? Don't you think that this is also a perquisite under 17(2)(4)? Yes or no? It will not be treated as your perquisite under 17(2)(4) because it is fully exempt under section 10(10)(c) in the hands of employee. Why? Because if this amount is not exempted, what will happen? This amount of tax which the employer is paying will be treated as your perquisite. Again, it will be included in your salary. On that, who will pay tax? Employee will have to pay. Employee will say, what is the benefit to me? The tax which you are paying again becomes my perquisite. Hello, again becomes my, and on that I have to pay tax. Employer will say, no, don't pay, I will pay. Again that will become perquisite. Tax on tax on tax on tax. Every time the employer will pay tax, it will become your perquisite. Every time the employer will pay tax, it will become your perquisite. Understanding what is going to happen? Hello, sir. 2 lakh rupees was your non-monetary salary. For example, 10,000 rupees tax is there. How much? That 10,000 is paid by? 10,000 is paid by? Was it your obligation? Met by employer? What if that was taxable for you? What if that was not exempt? It would have been considered as your perquisite. Yes or no? So that 10,000 would have also got taxed in your hands under the head salary. So that 2 lakh is getting taxable. Along with that 2 lakh, this 10,000 will also be taxed. Getting my point? Now how much will be taxed? 2 lakh 10,000. On that 10,000 also, again the tax you will have to pay. Because that 10,000 has now become your perquisite. Getting my point? Now on that 10,000 also, what if the employer will pay tax? On that 10,000 which has become your salary, the employer will have to pay tax. Employer again pays tax on that. Again that was your obligation. It will become perquisite again. Hello? And again it will be on that 10,000, for example, 1,000 rupees was tax. How much? That 1,000 will again become your perquisite. On that 1,000 who will pay tax? You will only have to pay. Employer say, no, don't pay, I will. This will not end only. Getting my point? So end it before it begins. What did I say? End it before it begins. Exempt it in the very beginning only. So, fully exempt under section 10(10)(c). Whatever tax your employer is paying on your non-monetary perquisite, non-monetary benefits, non-monetary salary, yes or no? Entire tax was supposed to be paid by you. It was your obligation. It was your liability. Even though it is met by the employer, don't consider that amount as perquisite under clause number 4. Because that is fully exempt under section 10(10)(c). Yes or no? Now, what about the employer? Discussion about the employee is done. Now, employer will pay this tax. Isn't it an expense for the employer? Will your employer tell that this is my expense on my employee? In my business, there are employees. On my employees, I am incurring some expense. whatever salary I will pay to my employees, whatever benefits which I will give to my employees is my business expense. So for that business expense, I should get deduction under PGBP head. So your employer will now try to claim this amount as a deduction under PGBP head, saying that it is my business expense, because in my business, whatever employees are there, on those employees, I'm incurring this expense. Even if this is a tax of employee, but it is paid by me in the course of my business or profession, so I should be getting the deduction for this under the head PGBP. Will your employer go and try to claim this deduction? In the hands of your employer, in the hands of your, this amount will not be treated as business expense. This will be disallowed. This will be, employer cannot claim this amount as a deduction under PGBP head. There is a section 40, clause A, subclause 5, under the head PGBP, which says that this tax will be disallowed. This tax will be for whom? For the employer. Employer cannot claim this amount as deduction under PGBP head. Why? Simple. If your tax was 10,000 and the employer has paid how much? 10,000, and if he gets that 10,000 deduction under PGBP head, every employer will start doing it. He will not incur any expense and still he will, save taxes. His taxes. This 10,000 I will pay from my pocket. What I will tell you, let's see, how much was your tax? 10, no? Don't pay that 10. Give me 8, I will pay your 10,000. So employer will start recovering that tax from the employee, not fully, but partly. You will save your 2,000 rupees tax. If the employer would not have paid this 10,000 rupees of tax, who would have paid? Employee would have paid. But employee, don't pay 10,000. Do one thing, I will pay this 10,000 for you. You just give me 8,000. So how much I will pay to the government? 10,000. Don't you think out of that 10, I have already recovered 8,000 from you? Hello? So how much is my expense? But I am taking a deduction of 10,000. Getting my point? And by taking that 10,000 rupees of deduction, I will reduce my business income by 10,000. On that, I will save 30% tax. 3,000. So to save that 3,000 rupees of tax, 2,000 is only going from my pocket. Still 1,000 rupees tax I am saving. And the money comes back to me. 8,000 money comes back to me. Only 2,000 I have spent, but I have saved a tax of rupees 3,000. Every employer will start doing it. Getting my point? So for employer also, this should not be allowed as a deduction. Will you remember this? So we were doing which perquisite, guys? Clause number 4. Clause number, what you have to remember? Simple thing you have to remember. Any obligation, what did I say? Any obligation or liability of the paid or reimbursed by the, that will be a benefit, that will be a perquisite in the hands of employee. Okay, no? Fully taxable. How much? Amount actually paid or reimbursed by the employer will be the taxable value. But while you charge this amount, you have to remember this. Getting my point? What do you have to remember? Any tax on the non-monetary salary of the employee, if it is paid by the, please don't consider this amount as a perquisite under clause number 4, because this is fully exempt under section 10(c) in the hands of employee. And for employer also, he will not be eligible to take the deduction of this amount under the head PGBP, because this amount is fully fully disallowed as per 40 clause A subclause 5. In PGBP head, no, this disallowance is going to come, and I'm going to ask you at that time. Will you remember this? Sure, everyone? Clause number 4 is done. Okay, now pay attention. What we were doing exactly. See, 17 subsection 2, definition of perquisites. Clause number 1 and clause number 2. Value of accommodation, rent-free accommodation and accommodation at, as per rule 3.1, value has been determined and we have already seen it. Okay. Now second one, value of prescribed benefits or amenities. These 5 benefits which are taxable only in the hands of specified employees. We have already seen the valuation. Okay. Now just now I have completed clause number 4. If you can see, obligation or liability of the employee met by the, I have just now completed this. Okay. Now we are moving to clause number 5. Okay. Pay attention here. See, personal liability or the obligation of the employee met by the employer will be a perquisite. Taxable value will be actual amount paid or reimbursed by the employer towards employee's personal obligation or liability. Examples are there. I have already given you all these examples. Okay, no? And this is an important note. Just now I have discussed. Employer is giving how much salary? 10 lakh. In my example, I took 12 lakhs. Instead of 12 lakhs, I have given a different example with different number in my notes. Yes or no? So salary is how much? 10 lakh. Monetary salary is? Non-monetary salary is? On your non-monetary salary, example, the tax liability was? And this has to be deducted from your salary as TDS. So entire salary on 10 lakhs. The tax is to be paid by you. The tax is deducted as TDS. But what your employer does? He deducts tax only on this amount. And the tax on this amount, he will not deduct from your salary, he will pay from his pocket. Getting my point? So is he deducting this tax from your salary? No. This is not deducted as TDS. What is happening? This amount is paid by the... So what are the effects you are going to give? First effect and second effect. First effect, in the hands of employee. Will it be treated as perquisite under clause 4? No. Why? Because it is fully exempt. But for employer, what will be the tax treatment, guys? Will the employer be able to claim this amount as a deduction under PGBP head? Why? Because as per section 40 clause A subclause 5, it is disallowed in the hands of employer. Right? Now let's move on to clause number 5. Clause number 5 talks about premium. Clause number 5 talks about premium on the life insurance policy, premium on the annuity policy. 2 policies only. First one is premium on life insurance policy. Second one is premium on... Now see, your life insurance policy is going to give you benefits. Your pension policy, annuity policy is going to give you benefits. So the premium for that policies has to be paid by you. But the employer, under the employment contract, the employer tells that don't worry, your life insurance premium the company is going to pay, employer is going to pay. Your annuity policy premium, don't worry, no need to pay, the employer is going to take care of that, employer is going to pay that premium. So along with the salary which the employer is giving, as per the employment contract, the employer is also giving you additionally this benefit. Now there is no law in India which says that employer will have to pay this premium, meaning that employer is doing it voluntarily to provide you benefit. Getting my point? No law in India tells the employer that you should make the payment of this type of premiums. See, there is law in India, which there are different laws in India, which compels an employer to make certain type of payments for the employee. Like there is PF law, Provident Fund law, which will tell the employer to make the contributions in Provident Fund. Getting my point? There is pension law. That pension law will tell the employer that you will have to make the contributions for the employer in the pension fund, etc. There is employee state insurance law. As per the employee state insurance law, the employer will have to make payment in employee state insurance schemes. Getting my point? So there are different laws in India. According to those different laws, the employer will have to make the payments, certain type of payments for the employer. So employer is not going to do those things on his own. The law compels him to do that. And because of any legal requirement, employer is doing that. Getting my point? But what was the legal requirement here? Was there any law telling you to pay the life insurance premium for your employee? Was there any law which was telling you to pay the annuity policy premium or the pension policy premium for your employee? No. Under your contract of employment, you are making yourself contractually obligated to do that. There is no law in India which compels you to do that. Meaning that this is a pure personal benefit which you want to offer to your employee. Hello? So whatever benefit which will go to your employee because of this premium which you are paying for him will be taxable in the hands of employee as his perquisite. Getting my point? So if there is an employer, he is paying what? To the, and this premium is payable directly or on what? Life insurance policy or of the, then that will also be treated as a perquisite in the hands of employer. So whatever premium the employer is going to pay for this year, yes or no, will be treated as a perquisite. Premium on life insurance policy and premium on annuity policy. That's it. Only two premiums. Number one, premium on life insurance policy. Number two, premium on annuity policy. Number one, life insurance policy. Number two, these two premiums, if the employer is paying, that means he is offering you personal benefit as per clause number 5. Understanding? So how much will be the taxable amount? The total premium payable by the employer during the year will be your benefit, will be taxable. Understanding? Why? Because payment of this type of premium to the insurance company by the is nowhere required under any of the laws. Getting my point? But please remember that these payments are also to be done by the employer. This payment is done as per contractual between the employer and there is a contractual obligation. Employment contract is made. So as per the employment contract, if the employer is making himself obligated or liable to pay this, that means you are taking this liability on yourself. No law is telling you to do that. Meaning this is a benefit which you want to provide to your employer. Yes, sir, employees. Now, if following payments are also to be made by the employer. Now what type of payments? See, payment to RPF account, Provident Fund account, payment to approved superannuation fund account, then payment to deposit linked insurance fund which is established under Coal Mines Provident Fund and Miscellaneous Provisions Act 1948 and Employees Provident Fund and Miscellaneous Provisions Act 1952. Okay, so insurance premium paid by employer on behalf of employee under the group annuity scheme, employee state insurance scheme, fidelity insurance scheme. Now, if you see any of these payments, if you see these payments employer has to do, because there are laws in India which compels the employer to make such type of payments. If there was no law compelling the employer to do such type of payments, the employer would not have done these kind of payments. So my intention was not to provide you a personal benefit by making these payments. Getting my point? Rather, the law is telling me to give these benefits to you. Hence, I am giving these benefits as per the requirement of law. But for this, there was no law in India which tells me to make this type of payment. Hence, if I am making this type of payment, will be treated as your personal benefit. Getting my point? Hello, sir. So, clause number 5. Clause number, only two things. Only two things. Number 1, payment of premium on life insurance policy, payment of premium on annuity policy of the employee by the employer will be a taxable perquisite in the hands of employee. Whatever premium which is payable for this year will be entirely taxable in your hands as your perquisite. Understanding? But don't consider these items as your perquisite under clause number 5, because these are not treated as personal benefit which is contractually given to the employee. These are legal obligations of the employer. So the legal obligations of the employer cannot be treated as your personal benefit. Getting my point, everyone? So this was your clause number 5. Yes or no? Now let's move on to clause number 6. One by one, how many clauses we are supposed to do? 8 clauses are there in perquisites. Hello? Clause 1, 2 done, 3 done, 4 done, 5 done. Now only 6, 7, 7A and 8. 6, 7, 7A and 8. Only these clauses are remaining. Yes or no? Now, sweat equity shares. Clause number 6 says that sweat equity shares or securities under ESOP. Have you heard about sweat equity shares? What are sweat equity shares? Very good. Can be issued at to the employee will put his blood and sweat. He will work very hard for the employer. So now the employer is very happy with the efforts which the employee is putting. Getting my point? So out of his happiness, employer wants the employee also to become the owner. That being an employee, you are working so hard. Just imagine if we'll make you the owner by issuing shares to you. Yes or no? If we are issuing shares to you and you buy those shares, so now you will become the owner, because shareholders are the owners. So as an employee, if you are working so hard, just imagine as a owner, you will do wonders. Getting my point? So that is a kind of appreciation which the employee will get for his loyalty, for his services. So there are certain conditions which the employer will put before offering these things. Okay. So ESOP securities are given, sweat equity shares are given to the employee. Before giving these things, there will be certain condition. Industry to industry, employer to employer, the conditions will be different types of conditions. Okay. So in some industry, some conditions are there. In some other industry, auto industry, some other conditions will be there. In what do I say? This IT industry, the different conditions will be there. So there are different industries. Auto industry is there, transportation industry is there, IT sector is there, okay, likewise manufacturing sector is there, different types of industries are there. And in different industries, different types of employers are also there. every employer will not follow the same conditions. Employer to employer, the conditions will be different. So for example, I am your employer. I might have different conditions which I will put. If you satisfy those conditions, I will become happy and I will offer these securities, or I will offer these shares to you. Now, first, there will be some conditions. First, there will be some. If the employee fulfills those conditions, he will become eligible. He will become to get what? Sweat equity shares or securities under ESOP. Yes or no? So you all are my employees. I am putting a condition. What type of conditions? That you have to stay with the company for 5 years minimum. How many years? In these 5 years, every year, you are supposed to achieve a sales target of this percentage. So I have given you a sales target. Okay. So if you are achieving this much target in the first year, this much target in the second year, this much target in the third year. Likewise, for 5 years, I am giving you some targets. If you stay with me for 5 years, if you achieve these targets for 5 years, yes or no? Then, after 5 years, after you will become eligible. You will become to get these type of shares, to get these type of securities. So for example, 5 years you have completed and you have also satisfied those targets. You have also achieved those targets. Yes or no? Now after 5 years now, we both will sit together and I will tell you that remember 5 years back I gave you some targets. 5 years back I told you to stay with me for 5 years. So you have satisfied all the conditions. I am very happy. Now after 5 years I am offering you. I am offering you shares. 1,000 shares you can buy from me at a predetermined price of 100 only. Whatever may be the value of these shares in the market, yes or no? You are not supposed to give that amount to me. Just give me 100 per share and you can buy 1,000 such shares from me. Sweat equity shares. Possible, not possible? So after 5 years, we are sitting and I am offering you what? I have already allotted or I am just giving you an offer. Offer which you may accept, which you may exercise. This is just an option. This is not a compulsion. Okay, no. After 5 years, since you have satisfied the condition, you are now eligible. Now you are eligible to get what? These shares which I am offering. How many shares I am offering you? 1,000 shares I am offering at a predetermined price, 100. Right now only I am telling you, whenever you will come and buy these 1,000 shares from the company, from the employer will offer this for only 100 per share. Give 100 rupees and take 1 share. Give another 100, take another share. Give another 100, take another share. Yes or no? Likewise, how many shares you can buy? Getting my point? So, option is given. After the completion of 5 years and after satisfying the condition, the option is given. Option to acquire. Option to sweat equity shares. Option to acquire securities under ESOP. So first the option will come. Now you will be given some time. 1 year's time, 6 months time to exercise this option. If you want, you can buy these 1,000 shares from me within the next 1 year at any time. So within the next 1 year, come at any time and you can buy these 1,000 shares from me. So after 1 year, this option will lapse. You will no more be eligible. So if you want to buy, you can buy in the next 1 year. Getting my point? So that 1 year time frame which I am giving you is known as exercise period. Is known as in that exercise period, you are supposed to come at any time and you have to exercise the option to buy these 1000 shares. Understanding or not? Can you buy all the 1000 shares? Can you buy part of these 1000 shares? But you have to buy them during this exercise period only. Yes or no? So for example, I am giving you this option I have given you, and in the exercise period, whenever you will come, I am going to take the market value from you. So exercise the option, buy the 1000 shares. I will take the market value, or I will take 100 rupees only. Price is predetermined. Price is whatever may be the value of these shares. Will I take that value, or I will take the predetermined price? Or I can offer you free of cost also. Yes or no? So either I will offer you free of cost, or I will charge some money, that predetermined price, which will be very, 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 very less as compared to the actual value of those shares. So now, for example, within the exercise period, at any time you will come, the date on which you are coming and exercising the option. What did I say? The date when you are coming and exercising the option to buy these shares, is known as date of exercise of option. Date of. On that date, the value of the shares was 500. How much was the value of the shares? 500. Are you going to give me 500? Or I have offered you only at 100? So you give me 100, I will give you the shares. What was the value of the shares? And I am offering you at how much? How much is your benefit? As per clause number 6, that 400 will be your benefit. Taxable under the head salary. Will you remember this? Hello? Why salaries? Because employer is giving you this benefit. Instead of giving you salary, the employer can give you salary like this also. Hello? Understanding? So first thing what happened? I have put some conditions in front of you. If you satisfy those, you get the option. You get the option to buy the Sept equity shares, or now this option you have to exercise within the exercise period, within that exercise period, whatever date you will come, whatever date you will exercise the option to buy. Yes or no? The date of exercise of option. What did I say? Date of exercise of option. D-O-E-O-O. What did I say? D-O-E-O-O. Date of exercise of option. D-O-E-O-O. Understanding? On this date, whatever may be the value of the shares, that value you should have given me. But are you going to give me this value? So take that fair market value as on the date of exercise of option. Against that, how much the employer is charging? If he is not charging anything, free of cost, then 0. But in my example, employer was charging only 100. So the value could have been 1500 also. Value would have been 700 also. Value as on the date of exercise of option can be any value. But definitely that value will be higher as compared to what the employer is charging. So the difference between the market value as on the date of exercise of option and the amount which the employer is actually charging, 500 minus 100, that entire amount will be treated as your perquisite as per clause 6, and even that will be taxable under the head salary. Will you remember this? Sure, everyone? How many shares I offered? Did you exercise the option for all the 1000 shares? No. You exercised the option only for 500 shares. How many shares? So the date on which the option was exercised, on that date, during the exercise period, first time you are coming and you are telling me that I am going to exercise the option to buy only 500 shares. So on that date on which you are exercising the option, are you exercising the option for all the 1000 shares? No, you are going to exercise the option for only 500 shares. So you are buying 500 shares. As on the date of exercise of option, the fair market value was 500. 500 minus the employer has recovered how much? 100. So 400 rupees benefit per share. 400 rupees benefit will happen on how many shares? On 500 shares, whose option you are exercising. So 500 into 400 will be 2 lakh rupees. That 2 lakh will be taxable as your perquisite. Now what about the balance 500 shares? What about the balance option of 500? You still have the option to exercise 500 shares because the exercise period is still going on. Yes or no? Now whenever next time when you will come, you are going to exercise the option to buy these 500 shares. Yes or no? So at that time again the valuation will be done. But now the date of exercise of option for these 500 shares, the remaining 500 shares will be different. On that date, for example, the value was 650. How much? And how much the employer has charged? Only 100. So how much is your benefit? 550. 550 into remaining 500 shares. That will be the benefit. Getting my point, everyone? So tell me, is your employer giving you sweat equity shares or securities under ESOP on satisfying certain conditions? You got the option to buy these shares or securities. Now these will be offered either free of cost or at. So this will be treated as your perquisite. Now how the value of this perquisite will be determined is given in Rule 3, Sub-Rule 8. Whatever value of this perquisite will be there will be taxable for the employee as his salary. Now how to determine this value is given in Rule 3.8, which says that you have to take the fair market value of these shares or securities as on the date of exercise of DOEOO. Will you remember? Please, please, please always take the fair market value as on the date of exercise of option. Okay. The fair market value of the shares or securities as on the date of exercise of option minus the amount recovered from the employee will be the benefit multiplied by number of shares for which the option is exercised will give you the taxable value of perquisite. But wait, this value which you are going to determine will be based on the as on the date of, but this will be taxable in the year in which the shares are allotted, the securities are allotted. And it is not necessary that the shares or securities will be allotted on the same date on which you have exercised the option. For example, if you have exercised the option on 15th of July 2025, can I say this is date of exercise of option? Always take the fair market value as on this date. Will you remember this? So now I am putting you in some trouble. Huh? Ready? The date of exercise of option was 15th of July 2000 and tell me which previous year? Previous year 25. In previous year 25-26 you have exercised the option on this date. So always take the fair market value as on this date only. Okay. So fair market value as on this date was, example, I'm taking 900 rupees per share. How much was the fair market value? And the employer is recovering how much? Example, the employer is making a recovery of 250 per share. How much recovery? 250. So how much is the benefit? 100%? Yes or no? So therefore taxable value will be how much? 900 minus 250 will be 650 per share multiplied by number of shares. Yes or no? So for example, number of shares for which the option was exercised was 1000 shares. How many shares? So how much is the total benefit? 6,50,000. Now this is the taxable value of your. So the valuation will be done like this. To determine the value, you will take the fair market value as on the date of exercise of option. But this taxable value of 6,50,000 will be taxable in the year in which the shares are allotted. In which the shares are. Now, right now, they have not told you that when the shares are allotted. If the question is silent, question is giving you only this much details, then assume that the shares are allotted on the same date. Yes or no? But if the examiner is little bit smart, the examiner, they will always be smarter than you. Examiner will tell you that these shares are allotted. Now they are telling you date of allotment. They are going to tell you. If date of allotment is not given in the question, question is silent. We will assume the date of exercise of option and date of allotment both are same. But if the date is given and that date is separate, tell me any date. Sir, 3rd of July. 3 slabs I will give you. Bloody, you will exercise the option on 15th on July and the shares will be allotted before that. Apply some mind. Any date you can say, but that date should be after the exercise of option, no? Can I take the date in the month of August? Yes. Can I take the date in the month of September? Any date I can take. So let's take one example, simple example, that the date of allotment was 10th of September 2025. 10th of, this is the date of, this is the understanding, no? Now tell me, this date is coming in which previous year? Previous year 25. You are very fortunate, you know. Option was also exercised in 25, 26 and the allotment is also happening in. So this entire value will be taxable in the year 25, 26 because the shares are allotted in 25, 26. But if I will change the dates a little bit, little bit, okay. Instead of 15th of July, I will take 15th of March 2026. So this is the date of exercise of option now. The fair market value, I have to take 900. Date of exercise of option. Yes or no? That is not going to change. Okay. And the shares are allotted on 10th of April 2000 meaning the previous year has now changed. Understanding? Now tell me, to determine the value, you are going to take the fair market value as on the date of, which is 900. So 900 minus 250, the recovery. Yes or no? 650, 1000, 6,50,000. You came to know that this is the taxable value. You came to know this in the previous year 25, 26 only. But don't charge this in 25, 26. Why? Because the shares, till the time the shares are not allotted, this benefit will not come to you. You have just exercised the option. And you just came to know that, okay, after exercising the option, this is my benefit. But this benefit will actually become yours only if the shares are allotted. Actually becomes yours only if shares are allotted. And when the shares are allotted? This year or next year? So this benefit will become Yours this year or next year? Should be taxable in the next year because the shares are allotted next year. Getting my point, everyone? Now what they will do, did you understand this much? Now what they will do, as on the date of allotment also, the fair market value they will give you. 1040 rupees per share. They are going to give you this fair market value also. Now what are you going to do? You will take this fair market value for the value of for valuing the perquisite. Never take this fair market value. You have to always take the fair market value as on the date of exercise of option. DOEOO. Will you remember this? Sure, everyone. And in the capital gains chapter, again I am going to make you recollect this thing. This thing is again going to come in front of you in the capital gains chapter. Because now you have got the shares. Now what if these shares you are going to sell in the future? These shares are your capital assets. And if you will sell these shares in future, so you are selling your capital asset. Will you calculate your capital gains? Yes. So to calculate the capital gains, how will you calculate? Selling price minus cost price. Selling price minus will give you what? Capital gain, profit, yes or no? So how will you calculate the profit? Right now, tell me, what was the fair market value? And how much the employer was charging? So, how much is your benefit? Which is already taxed under the head salary as your perquisite. Now, these same shares in the future if you will sell. For example, these shares you are selling in the future for 1500 rupees. How much? So, selling price in future will be how much? You are calculating what? Capital gain in future, because the shares which are coming to you are your assets now. Asset means capital asset. Now whenever you will sell the asset, your capital asset in future, at that time you are going to calculate the capital gain also. How will you calculate that capital gain? You will take the selling price of the asset minus the cost price of the asset. So selling price of the asset, selling price of the shares in the future was 1500 example. So what was the cost price of the shares? What you are going to take? How much did you pay to buy the shares? 250. So how much was the cost? So how much will be your capital gain? This is wrong, this is wrong. Sir, but I paid only 250, no? You paid only 250 and you got these shares. Now the same shares you sold for 1500. So definitely 1250 benefit is there. Hello sir. But that 1250 which you are charging under the head capital gains, don't you think out of this 1250, already 650 is charged under the head salary as your perquisite? And if you will take this 250 as a cost over here to calculate the capital gains, what will happen? That 650 which has already got taxed as perquisite will again be taxed as your capital gain. You want to pay tax on that 650 twice, or only once is enough? Once is enough, no? So now that 650 should not be again taxed as your capital gain. So don't take this 250 as cost. Take that same fair market value as on the date of exercise of option. Take that amount as your cost price. So how much will be the gain now? 600. That way 650 got eliminated here. Why? Because that 650 already taxed under the head salary. Simple, no? Logic. 250 you are buying, you are selling for how much? 1500. Total benefit, total gain 1250. 250 you are buying, you are selling for 1500. Total benefit, total gain 1250. Yes or no? Out of 1,000, 250, 650 is already taxed under the head salary. So under the head capital gain only 600 should be charged, no? So to charge this 600, what cost price should you reduce from 1500? 900, balancing figure. Ayo, that 900 balancing figure was nothing but your fair market value. That fair market value will take care of your 250 cost also, and that 650 which has already got taxed under the head salary as your perquisite. Understanding? There is one section 49 2AA which says that whenever you will sell these shares in the future, the shares which you got from your employer, the securities which you got from your employer, understanding? Whenever in future you are going to sell these type of shares, the cost price to compute the capital gains will not be the actual cost which you have paid. 49 2AA says that it will be the fair market value as on the date of exercise of option, which you have already considered, to compute your perquisite. That same fair market value will be deemed to be the cost price of these shares to calculate the capital gains. But if you will not take this fair market value, what will happen? You will take actual cost. And if you will take actual cost, what will happen? That 650 which you have already taxed under the head salary will again be taxed as your capital gain. One amount will be taxed twice in your hands. If you don't want to do that, take this fair market value as cost. That is what 49 2AA says. Will you remember this? Hello? Easy? Pakka? Okay, very good. See, now this clause number 6 is done. Now clause number 6, after clause number 6 there is clause number 7 and there is clause number 7A also. Yes or no? That we are going to do later on. But first, let's move on to clause number 8. Clause number 8. Very important and very easy also. Okay. So one by one, tell me how many perquisites are there? Clause number 1 to clause number 8. How many perquisites? Clause number 1 to clause number 8. Clause 1 and clause 2. 17 subsection 2. 17 subsection 2. Clause number 1 and clause number 2. Both are talking about accommodations. Rent free as well as concessional rent. Done. Clause number 3. 5 perquisites. Taxable only in the hands of. And I have told you that this time there is an amendment here. The definition of specified employee they have changed. Who is a specified employee? Director in a company is a specified employee, or any other employee in the company having substantial shareholding, 20% or more share capital, yes or no? Then any other employee whose net cash salary during the year is 4 lakh rupees or more, yes or no? More than 4 lakhs, sorry, not 4 lakh or more than 4 lakhs. So that is a specified employee. Now these 5 perquisite under clause number 3 will be taxable only in the hands of specified employee. Then clause number 4, just now we saw obligation or liability of the employee paid by the employer. Clause number 5, premiums, life insurance premium, annuity policy premium of the employee payable by the employer. So whatever premium payable by the employer will be perquisite. Clause number 6, sweat equity shares or securities under ESOP will also be treated as your perquisite. We will have to calculate the value. How will you calculate that value? Fair market value as on the date of exercise of option minus the amount recovered from the employee, if any. Yes or no? That balance amount will be taxable as your perquisite. But remember, that amount will be taxable in the year in which the shares are allotted. Understood? Then clause number 7 and clause number 7A. These two clauses we'll do in the end. Okay. Now pay attention, clause number 8 is there. Clause number 8 says that there are certain notified fringe benefits. Which benefits? What do you mean by fringe benefits? Non-monetary benefits. What benefits? So if you have some non-monetary benefits coming from you are an employee, you are getting fringe benefits, meaning non-monetary benefits, and these non-monetary benefits are notified. So which non-monetary benefits are notified? They have started notifying 1, 2, 3, 4, 5, 6. Then they got tired. And in the end they said, any other facility, amenity, benefit, service, privilege. Now we are not going to notify further. We have tried to notify as many as we can, but then we realized that identifying each and every fringe benefit and notifying each and every fringe benefit is a foolishness. Because even we also don't know that what different other types of fringe benefits the employer might give to the employee. Getting my point, everyone? So initially they started notifying one by one. Then they got tired and they thought that this is a foolishness to identify each and every fringe benefits. Getting my point? Then they introduced this last point. Any other. Meaning the fringe benefits which are already notified, the value of those fringe benefits will be taxable as per COSET, but don't think that only these fringe benefits will be taxable. Any other benefit, any other amenity, any other service, any other privilege given by the employer to the employee will also be treated as fringe benefit only. Will be taxable as per COSET in the hands of employee. Will you remember this? Sure, everyone? Hello. So first fringe benefit, read the names one by one. Come on. Number 1. Then second one, traveling, touring and accommodation facility. Third one, food and non-alcoholic beverages. We call it meals. Yes or no? Employer is giving meals. Then employer can also give you gifts. Then credit card. After credit card, club facility. Then after club facility, employer is giving movable assets to the employee, that take my asset and use my asset. Yes or no? Or after use of movable assets, and after that any other benefit, any other facility, amenity, service, privilege given by the employer to the employee. Now if you can see here till point number H, specific type of fringe benefit is there. They have identified the benefit, but then they left identifying and they covered everything in the last point. Yes or no? Now even if you are getting a simple small benefit also from your employer, that will be covered here in clause number 8. If it is not identified, then it will be covered here. Understanding? So first benefit is, or, so are you an employee? Your employer might give you loan. Can your employer give you loan? What type of loan? No. What type of loan? Education loan, housing loan, personal loan, medical, any type of loan you are going to take from your, is the employer charging any interest from you? Not at all. No interest is charged. So, interest-free loan. Or employer might charge, but the rate charged by him is very less as compared to what you would have paid if you would have taken this rate, if you would have taken this loan from outside. Yes or no? Are you going to get the benefit? What type of benefit will happen? Interest benefit will happen. What benefit will happen? You are going to save interest. The interest which you should have paid minus the interest which you are actually paying is your benefit, isn't it? So that interest which you are saving, the savings in your interest will also be treated as your perquisite. How to determine the value of these perquisites? That is given rule 3. Rule 3, sub-rule 7. All the benefits will be covered in the same rule. Getting my point? So first we'll learn how to value the first perquisite. Interest-free loan or loan at concessional rates. Now, tell me, I am your employer. You are I am giving you a loan is, am I charging any interest? Zero interest. Or am I charging any interest? Yes, but the rate is very less. Rate is very less, meaning concessional rate. So, because of the interest-free or concessional rate loan, the benefit will arise. What benefit will arise? Interest benefit. That is treated as your, so the value of that interest benefit you are supposed to find out. How will you find out that value? Hello? Rule 3, sub-rule. As per this rule, you will find out the value. And this value, you are going to show taxable under the head salary. Yes or no? So, to determine this value, very simple. Take the loan amount, multiplied the reasonable rate. The rate of interest which you should have, the interest which you should have paid. If the loan would have been taken from outside, not from employer. So if you would have gone in any bank and you would have taken this loan from the bank, how much interest you would have paid? Minus on this same loan, how much interest you are actually paying to your interest, to your employer. So the interest which you should have given minus the interest which you are actually giving will give you the interest benefit. Getting my point? So for example, you have taken a loan of rupees 10 lakhs. On that 10 lakh, if the interest you would have paid to any bank, the interest would have been 10%. How much? And to your employer you are paying only 2%. So how much is the benefit? So 8% on that 10 lakh, you calculate. You are going, that amount will be your interest benefit. On that 10 lakh, you were supposed to pay 10%, amounting to 1 lakh. On that 10%, how much you are paying? 2%, meaning 20,000. How much you are saving? 80,000. Yes or no? So instead of calculating interest twice, calculate interest only once. Calculate the difference between the interest rates. And that interest rate difference, apply that interest rate difference on your loan amount. Getting my point? You will directly get the interest benefit. On this loan, this much interest you should have paid. Now, on that same loan, this much interest you are actually paying. So, the difference between both the interest is your interest benefit, and that interest benefit will be treated as your perquisite. So, what are you going to take? You are going to take loan amount outstanding. You are not going to take the amount of loan which you have taken. Because out of that loan, you would have paid the loan amount, no? So you are supposed to see that during your previous year, during your, how much loan is outstanding. And that loan amount outstanding you are going to check as on what date? As on the last day of each month. Because this interest benefit you are supposed to calculate for each month. Why? Don't you think that the loan repayment will go monthly? Every month the loan amount will change. So if the loan amount will change every month, so the interest benefit will also change every month. Hello? If the repayment happens every month, so you will have to calculate every month interest benefit separately because the loan will change every month since you are making the repayment every month. So always take the loan amount outstanding. Loan amount as on the First day or last day? Why not first day? Because see, for example, in the beginning of the month, 10 lakh rupees was outstanding. How much was outstanding? And on 7th, you are paying 50,000. 7th of that month, you have made the repayment of 50,000. So how much loan is now outstanding? During the same month, wait, see, this is a month. In the beginning, how much loan is outstanding? 10 lakh. So on the 7th of this month, you are making a payment of. So for this first 7 days, how much loan is outstanding? 10 lakhs. And for the remaining 23 days, how much loan will be outstanding? Only 9.5 lakhs. Getting my point? So now what you'll have to do? You'll have to calculate the interest benefit twice for a single month. For the first 7 days, the interest benefit on 10 lakhs. And for the rest 23 days, the interest benefit on 9.5 lakhs. Will it increase your calculations? Will it complicate your calculations? So we don't want to increase your calculation and we don't want to make it complicated also. Do one thing, take the loan amount outstanding as on the, because that whatever amount will be outstanding as on the last day, that same amount was outstanding on the first day also. So from the first day to last day, this same amount was outstanding for the full month. On that same amount, calculate the interest benefit for full month. In this month, at least this amount was outstanding for the full month, starting of the month to end of the month. So tell me, first day of the month, how much was outstanding? And on the 7th, you have repaid how much? 50,000. So how much is outstanding? 9.5 lakh, which is outstanding as on the last day. This same amount was outstanding on the first day also, no? So on that entire 9 lakh 50, which is outstanding for the full month, yes or no? On that only you calculate your interest benefit. Getting my point? No need to complicate your calculations and no need to make the, make many calculations. Only one calculation for 1 month will be enough. And for that, take the loan amount outstanding as on the last day. Because that same amount will be outstanding throughout the month. Got it, sir? So, first amount, what are you going to take? Outstanding. As on the each month multiplied by interest benefit multiplied by how much will be your interest benefit? The rate of interest which you should have paid, reasonable rate of interest. Reasonable. If the same loan you would have taken from any bank, how much interest you should have paid? You would have paid. Yes or no? So, for example, you have taken an education loan from your employer. Employer is charging only 5%. Employer is charging only. So, actual rate of interest is very easy. Okay. But that same education loan you would have taken from any bank. How much the bank would have charged? 5% or a higher rate? Higher rate. How much? You went to HDFC Bank, asked HDFC Bank, can you give me education loan? HDFC Bank said yes. How much rate? 12%. Oh, 12%. So you went to ICICI Bank. ICICI Bank is offering the same education loan at 12.25%. Can the rate of interest be different? Can you go to Punjab National Bank and go and ask the bank that are you going to offer an education loan? Punjab National Bank is saying yes, we can give you. How much rate? 11.9%. Can you see? For different banks, the same loan you are going to take from any bank, the rate is not same. The rates are different. So which rate you are going to take? So take the rate of all the banks and do the average. No need to do the average. Take the rate of only one bank. Which bank? The bank which you like, or the bank which the government likes. And the government will believe the rate only of SBI, because that is a government bank, no? Understanding? So, the rate of the same loan charged by SBI, charged by, known as prime lending rate, known as, and that rate you have to check as on the first day of the relevant previous year. So, SBI's prime lending rate, what did I say? SBI's prime lending rate of the same loan as on the first day of the relevant previous year, that rate is known as reasonable rate. That rate is known as reasonable rate. Means this interest should have been charged from you. The interest which the SBI has charged, if you would have gone and taken this loan from SBI, what interest the SBI would have charged? We'll compare the interest charged by the employer with this interest. Getting my point? So reasonable rate of interest. What is the reasonable rate of interest? Guys, tell me. Reasonable rate of interest is SBI's prime lending rate of same loan as on the, will always be given in the question. No need to go out of your exam hall to SBI. Let's go to SBI and ask what is the rate. By the time you will come back to the exam hall, no, the paper will be over. So it will always be given in the question. Understanding or not? This will always be given in the question. Sir, what about the actual rate of interest? This is the rate which is actually charged by the, in the night before exam, you will get it in dreams, no? Or this will also be given in the question. This is given in the question. This is also given in the question. How about the loan? How much loan you have taken from the employer? Everything will be given in the, you just have to put it in the format and you are going to get the answer. But wait, don't you think that this will be per annum rate? This is also per annum rate. So the interest benefit which you are going to get, for example, the SBI is charging 12% per annum and the employer is charging 6% per annum. So how much interest you are saving? 6%. That 6% per annum you are saving, no, on this loan which is outstanding as on the last day. Are you going to apply that 6% per annum rate on this loan? Yes. So the interest benefit per annum you have calculated. But you have to calculate that interest benefit every month. So into 1 by 12, you will get the interest benefit for this month. Again in the next month, loan amount outstanding will change. Yes or no? Because again the repayment will happen. Multiplied by 6%. Again into 1 by 12. That will give you the interest benefit for the next month. Every month you are going to calculate. So, into 1 by 12. Into 1 by 12. Every month if you are calculating. Yes or no? But tell me, if there is no repayment happening in this year. Repayment happens only once a year. So can I say loan amount outstanding as on the last day of April will be same in May also, in June also, in July also? Every month loan amount outstanding same. Every month interest benefit is into 1 by 12. Every month it will be same. So you will do the same calculation 12 times or do the calculation once for the full year. Then no need to do 1 by 12. Understanding? But if the loan amount keeps on changing every month, so you'll have to do the calculation 12 times. Understanding? Because every month the repayment is happening. Because of that, the loan amount is changing every month. So for every month, you will have to calculate the interest benefit separately. For that, you are supposed to do into 1 by 12 also. Understood? Sure, sir. Should I move ahead? Two important things to remember. Number one, if the loan taken by the employee from the in aggregate? Single loan or in aggregate? Am I talking about single loan? No. Whatever loans you have taken from the employer in aggregate, the total amount of loan taken by you from the employer. If the total amount of loan taken, aggregate amount of loan taken, loan, I'm not saying outstanding. The principal which you have actually borrowed, the capital which you have actually borrowed, the money which you have borrowed, yes or no? The money borrowed in aggregate, if that amount does not exceed interest benefit of this loan, will be fully exempt. Just imagine, bloody, the entire loan amount is not more than 20,000. How much will be the interest benefit on that? Very small amount. And this much small amount of interest benefit we don't want to charge, because your loan itself is not more than 20,000. So even if you will calculate the interest benefit on this loan, that interest benefit will be like peanuts, very small amount. Getting my point? And we are not interested in charging the tax on a very small amount of interest benefit. So fully exempt. Understanding? So one loan you have taken from your employer and the loan amount was 15,000. Loan amount was, employer is charging only 5% interest. But if that same loan you would have taken from bank, the bank would have charged 15%. 10% interest benefit is there on that 15,000 loan, yes or no? But bloody, that 15,000 loan, interest benefit will be very small amount. Getting my point? The loan amount itself is not more than 20. So interest benefit on that, whatever interest benefit on that, will be fully exempt. Will you remember this? Gokul, tell me, what did I say? Stand up and explain. Do it fast. Taken by the more than 20,000. Seeing also you are not speaking properly. Sit straight and you will pay attention. Otherwise I will kick you out of the class, I am telling you. Don't just physically be present in the class, be mentally present also. And leave everything outside. Sit down. I am saying that if the loan which the employee has taken from the employer, aggregate amount of that loan is not more than, what is the aggregate amount of loan? 20,000 rupees or less than 20,000. On that loan, whatever interest benefit will be there, that interest benefit no need to calculate only, because it is fully exempt. But what if the aggregate amount of loan is more than 20? Then you will have to calculate the interest benefit like this on the entire loan. Yes or no? And that interest benefit will be taxable. Understanding? So first loan you have taken 15,000. That is the only loan which you have taken from your employer. Will there be any interest benefit taxable for you? Will you calculate interest benefit? Why? Why fully exempt? Because the loan amount itself is less than. Now can you take two loans from your employer? One loan 15,000, another loan also 15,000. None of the loan is more than 20. But both taken together aggregate is more than 20. Meaning on that entire 30,000, whatever interest benefit will be there, that interest benefit will now be calculated because it is taxable. How will you calculate? Like this only. on your screen? Hello, sir. Will you remember? Second important point. Whatever loan you have taken, any amount of loan, but the loan was taken for medical treatment. For medical treatment of specified diseases. Which diseases? So if the employee or any of his family members are suffering from specified diseases. Which diseases? The diseases are specified in Rule 3A. The diseases which are specified in Rule, so there is one rule. In this Rule 3A of the income tax rules, the name of certain diseases are given. You want to become a doctor or you want to become a chartered accountant? So no need to go and check the Rule 3A, what are the names of these diseases and all. Just remember, the disease must be a specified disease. And where the diseases are specified? Rule 3A. So they will give you the name of the disease also, and they will tell you that this disease is a specified disease. Yes or no? Like cancer is there, leukemia is there, then many other, different types of diseases they are given. They have given. AIDS is there. Lot many names are given. Some names you cannot even pronounce. Even the doctors get it difficult, Forget about chartered accountants. So, the disease must be and it is specified in rule. So, who is suffering with this disease? Either the employee or any of his family member. Now, if you will go and check the name of these diseases, treatment cost is heavy. Treatment of these diseases is very costly. So, you'll have to spend a lot of money for the treatment of these diseases. Yes or no? These are fatal diseases. This can take the life of the patient also. So, the treatment is very costly. Now, to get that treatment done, a lot of money is required. That money is not with you. What are you going to do? Let the patient die. Then, you will arrange the money, no? Where you will arrange the money? From any bank, from your relatives, from your people whom you know, or nobody is helping you, you can take the help of employer. So employer will help you with a loan. Now your employer is giving you a loan for what? For medical treatment. Medical treatment of specified disease. Yes or no? So tell me, will he charge more interest? Or he will charge very less interest? Or no interest also? Yes or no? Why would your employer do that? To give you personal benefit or to help you? So, any help coming from employer, should it be treated as a personal benefit? Fully exempt. Any amount of loan, forget about the amount of the loan. Amount of loan can be any amount. Yes or no? But that loan is taken for treatment, medical treatment of specified disease. Then on that loan, whatever interest benefit is happening, that interest benefit is not a personal benefit which is being provided by the employer. That is a help coming from the employer. Employer might be giving you a help. That this poor employee has already a burden of so much of the treatment cost, and that is the reason why that poor fellow is coming to me to take the loan, and as an employer I should help him to give this loan either interest free or concessional rate. So even though interest benefit will happen in this case, but that interest benefit will also be fully exempt. No need to calculate that interest benefit also. Will you remember this? Sure. Should I give you one example to solve? Please look at these notes properly once. Read the notes properly once. Done. Two notes. Read the notes properly. Done, right? Should I frame one example for you? Okay. Write it down with me. Don't talk. Which loan is taken? How much is the amount of loan? And when the loan is taken? This year only on 1st of July. And the employer is charging how much interest? Employer is charging interest at the rate of 6% per annum. On this loan, SBI's prime lending rate as on 1st April of the previous year was at the rate of 12% per annum. Possible, not possible? Possible, no? Loan repayment, rupees 50,000 per month. Starts from 7th day of each month. 50,000 will be paid and starts from January 26. Compute interest benefit. Okay, pay attention. We have to compute the interest benefit for this entire previous year. Huh? So in this entire previous year, starting from April 25 to March 26. April 25 to March. Tell me, in the month of April, did you take the loan? Was there any loan outstanding? May, June. So April 25 to June 25. Sir, there was no loan. Therefore, no interest benefit is happening. Yes or no? So for these 3 months, interest benefit will be taken as nil. Now from July you have taken the loan, no? Tell me, how much loan? 10 lakh rupees. And you have immediately started the repayment also, no? July onwards you are making the repayment. Repayment is starting from January. So can I say July month, last day of July month, the loan outstanding was 10 lakh only. August, September, October, November, December, every month the loan outstanding is 10 lakhs. Yes or no? Starting from July 2025 to December 25, every month loan outstanding was 10 lakhs. On this 10 lakh, how much interest benefit is happening? SBI's rate is 12% per annum. Employer's rate is 6% per annum. So interest benefit is 6% on this 10 lakh. Into 1 by 12 I will do for July also. Into 1 by 12 I will do for August also. Yes or no? How many months are there? July to December, how many months? 6 months. So for these 6 months I can calculate together. So into 6 by 12. Everyone, how much? If you want to calculate 1 by 5, 1 by 12, 1 by 12, you will have to do that calculation 6 times. So instead of doing that calculation 6 times, same calculation, do the calculation for 6 months together. That is what we have done. Simple or no? Now tell me, January 26. The first repayment will start from January. 7th of January, how much is repaid? So how much will be the loan outstanding as on 31st January? And that loan which is outstanding as on last day of January, on that I will have to calculate the interest benefit. 9,50,000 into 6%. How did I get this 6%? 12 minus 6 into 1 by 12. 47. Then February 26. February 26 is 9 lakh. How come 9 lakh, sir? Because on 7th February, again 50,000 will be repaid. So as on the last day of February, how much will be outstanding? 9 lakhs into 6% per annum into 1 by 12 will give you 4,500. Yes or no? Then March 26, 7th of March, again 50,000 will be repaid. That means 8 lakh 50 will be outstanding. Yes or no? And that same amount will be outstanding as on the last day. So 8 lakh 50,000 into 6% interest benefit into 1 by 12 will give you 4,2. Now on your calculator, take nil, take 30, take this and take this. Add all of them. Everyone got this 43,500? Easy or difficult? Sure. Now in the same example, if the loan amount was, instead of 10 lakh, it was 10,000 only. If the loan amount was only 10,000, then would you have calculated this interest benefit? Here the interest benefit would have been around 43 rupees and 50 paise. Yes, actually. 43 or 435, something like that. This much small amount of interest benefit we don't want to charge, fully exempt. Why? Because the loan itself is not more than 20,000. Yes or no? Now tell me, same amount of loan, same amount of, but if the loan was taken for medical treatment, it was a medical loan, then also fully, even if 43,500 is the interest benefit, now the interest benefit will be 43,500, but no need to calculate also. Why? Because the loan was taken for treatment of specified disease. Understanding? Sure. Now one small thing I am telling you. Same example I am keeping, okay, no? Same example. Instead of educational loan, now I am saying that this is a, which loan? And every month repayment is starting. And here now I am introducing one more detail. Now tell me, will your answer be same or it will be different? Loan is a medical loan. Loan is a medical loan taken for the treatment of specified disease only. Yes or no? So if this information was not given, no, then 100% fully exempt. But now they have introduced this information. They are saying that for this medical treatment, the patient was covered by medical insurance policy. The patient was covered by, and medical insurance company gave a medical insurance claim of rupees 6 lakh on 15th of December. Now whatever loan which is outstanding, what did I say? Which is to the extent of this reimbursement, to the extent of whatever loan is outstanding, to the extent of this. If you have not repaid that loan, it is still outstanding. Yes or no? Then on that loan, the interest benefit will be calculated and will be taxable also. Now, what are you going to do here? Here, first 3 months, same, no change. Yes or no? Now, from July to November, I will do the calculations. July to November. Instead of 6 months, it will be now how many months? 5 months. So this will be 25,000. But tell me, till November, what did I say? Did I get any medical reimbursement? Hello? So this 25,000 is fully exempt. Till November, do you have any problem? Sure. Now starting from December, my calculations will change. Starting from December, my calculations will tell me in the month of December, 25. Okay, no? On 15th of December 2025, how much mediclaim is received? Medical insurance claim rupees 6 lakh is received. On this date, how much loan is outstanding? Entire 10 lakh is outstanding, no? So, if on the same date you repay the 6 lakh rupees of loan, then on the balance 4 lakh, earlier also there was no interest benefit. Right now also there will be no interest benefit, and in the future also on that 4 lakh there will be no interest benefit. But have you repaid this 6 lakh entirely right now? No. You are paying 50,000 every month. Yes or no? So out of the total loan which is outstanding, out of the total loan which is the loan to the extent of this reimbursement, the loan to the extent of this, on that loan, now the interest benefit will be calculated also and it will be taxable also. Understanding? So tell me, as on the last day of December, how much loan is outstanding? 10 lakhs. Still 10 lakhs is outstanding. Have you repaid the 6 lakh or that 6 lakh is still with you? Out of 10 lakh, if bloody 6 lakh you have received, pay that 6 lakh right away, no? And if you have not paid that 6 lakh which has insurance company which has given to you, now that 6 lakh is no more a burden on you. Because that insurance company has given that money back to you. Getting my point? On that 6 lakh, now the interest benefit will be calculated and will be taxable also. 4 lakh rupees, which is medical loan only, but have you received that 4 lakh? Out of the loan which you have taken, to the extent of 6 lakh, whatever loan is there, on that interest benefit will now be calculated and will be taxable. But what about the balance 4 lakhs? Have you received that 4 lakh from insurance company? No. So the loan to the extent of that 4 lakh, what did I say? Loan to the extent of that. Earlier also there was no interest benefit on that 4 lakh. Right now also there will be no interest benefit on this 4 lakh, and in the future also there will be no interest benefit on that 4 lakhs. But loan to the extent of that reimbursement, on that amount of loan, now whatever interest benefit will come, that interest benefit will be taxable. Getting my point? So tell me, as on 31st, as on the last day, what did I say? Last day of December, how much loan is outstanding? Still this entire 10 lakh is outstanding, no? Because on 15th of December this 10 lakh was outstanding. On 15th of December you have received 6 lakh rupees from medical insurance company. Have you repaid this 6 lakh in the month of December itself? No. So as on 31st December, whatever loan is outstanding, out of that loan, the loan to the extent of that 6 lakh, on that interest benefit will be calculated and it will be taxable. So now what I will have to do, as on the last day of December, as on the whatever loan is outstanding, I will split that loan into two parts. That 4 lakh, on that there will be no interest benefit. Earlier also there was no interest benefit to be taxed. Right now also no interest benefit on this 4 lakh, and in the future also no interest benefit on this 4 lakhs. Yes or no? So tell me how much balance? On this 6 lakh, now I will calculate interest benefit into 6% into 1 by 12 for December month. Everyone, did you understand this? Tell me how much? 3,000 will be the interest benefit for which month? December month. Yes or no? Now, I'll move to January 26. Tell me, in the January repayment is made? Full 6 lakh repaid or only 50? So my interest benefit will now be calculated on 5 lakh 50. On that 4 lakh I am not supposed to calculate only. Yes or no? So in the month of January, still the 10 lakh, still now 9 lakh 50 will be outstanding. Yes or no? Out of 950, on 5 lakh 50, I will calculate interest benefit 6% into 1 by 12. Yes or no? And on this 4 lakh, no interest benefit. Everyone getting me? So tell me how much? 2,000. This will be the interest benefit for the month of January. February. Now I will not do the bifurcation. February, 9 lakh outstanding. Hello? But out of that on 4 lakhs, I am not supposed to calculate any interest benefit. Now out of 5 lakh 50, 50,000 is repaid. Yes or no? How much is remaining? 5 lakhs. On that 5 lakhs, I will calculate 6% into 1 by how much? Got it, sir? This is the interest benefit for February. March. March 26. How much will be the loan outstanding? 8 lakh 50. Out of 8 lakh 50, on 4 lakh I am not supposed to calculate. But remaining 4,50,000, meaning that out of 5,50,000 is repaid and now 4,50,000 is remaining. Yes or no? So on that 4,50,000, now I will again calculate the interest benefit at the rate of 6% into 1 by 12. That will give you 2250. Getting my point, everyone? So calculate 3,000 plus 2750 plus 2,500 plus 2250. That is going to give you 10,500. 10,000. So total interest benefit for this year will be 10,500. Got it, sir? First 3 months there was no loan, so no interest benefit. Till November there was 10 lakh outstanding. On that 25,000 interest benefit was also there, but don't calculate that. Why? Because that is going to be fully exempt. Until that time there was no medical reimbursement also. Medical reimbursement came in the month of December. Hello, sir. And in the month of December, if the medical reimbursement has come, meaning that from December onwards, now the interest benefit will be calculated. And it will be taxable. But it will be calculated and taxable only on the loan amount. Only on the loan amount, which is to the extent of medical insurance. Yes or no? Insurance claim received. Yes or no? Balance amount of loan which you have not yet received from the insurance company. The reimbursement has not come to the extent of balance amount of loan. On that there will be no interest benefit. Understood? Will you be able to calculate? This is the most difficult part of this interest benefit, which you have understood now. You want to copy this? Copy. But do one thing now. What I'll do, I'll share these notes today to you. Is it okay? I'll share the PDF only. Okay, no? Okay. Now pay attention. Now after interest benefit, traveling, touring and accommodation facility. We'll start from here after the break. Take a small break of half an hour. Breakfast, breakfast. Not lunch. Lunch, I'm going to give you another break. Take a small breakfast break, and break will be for half an hour. Take 45 minutes break. Take 45 minutes. Then again we'll meet after 45 minutes, okay?